Welcome back to 4-Wheel Finance. In this video, I'll be breaking down how much you need to make in order to afford a 2022 Honda Civic Type R. I think you should really consider following one of these rules in order to avoid making a huge car buying mistake. Cars go down in value very quickly, and so a bad decision will end up setting you back for years. I've also included a link to a free auto quote where you could save up to $600 a year in the description down below. Takes like 20-30 seconds, but more on that later. There are 4 options I'll be going over today. Obviously, you can decide on which one suits you the best depending on how into cars you are. Some people just want a reliable form of transportation, get them from point A to point B. Some are willing to sacrifice quite a lot more in order to get the car that they really want. Stick around to the end of the video. I have my own personal rule in there that's more geared towards somebody who's a car person or a truck person. This is 4-Wheel Finance, a channel dedicated to helping you making smart car buying decisions. Before I dive into the first rule, these videos take quite a lot of time and effort to make, so please give it a like and subscribe, and comment down below what other cars you'd like to see or your thoughts on any of this. The first rule I'll jump into is the 24-10 rule, and this states you need to put at least 20% down on the vehicle, you can't finance it for more than 4 years or 48 months, and the payment can't be more than 10% of your monthly gross income. Since the 2022 Civic Type R has an MSRP of about $40 grand, you would need to put down $8,000. And with the average new vehicle interest rate of 3.86% in a 48-month term, this would bring your monthly payment to $720.53. But take note here, you're also paying about $2,600 in interest over the life of this loan. Bankrate states the average monthly insurance cost is about $148. This varies quite a lot from person to person and your own situation. So again, I've got that link down there in the description. Find out exactly how much it would cost for you to insure a 2022 Civic Type R or any other vehicle. This brings your monthly total to $868.53. Now, if you go back to that 24-10 rule, given this would be $868, 10 times that, you would need a monthly gross income of $86.85. This would equate to about $104,223 annually. I really encourage you to take a look at the opportunity cost here. If you were to buy a cheaper $10,000 car, $5,000 car, and put what would be your car payment of that $720 in the market instead, over the course of 5 years with a conservative 6% rate of return, this would turn into about $50,310, gaining over $7 grand in interest. This is just for 5 years and a very conservative 6% rate of return. If you were to do this for 10 years, it would be about $117,636. Again, only at that 6% rate of return. And just for reference, historically, the stock market averages about 10% return per year, so that 6% is relatively conservative. The next rule I'll go over is the Dave Ramsey rule. You've probably heard of this before. 3 to 6 month emergency fund built up. The vehicle can't be more than 50% of your annual gross income, and you need to purchase it all in cash. Given the 2022 Honda Civic Type R starts at $40 grand, your gross income would need to be a minimum of $80,000. Ideally, it's nice to purchase a vehicle in cash, as again, you're avoiding having to pay that $2,600 in interest, and your insurance would be a little bit lower. But there aren't too many people that can just put $40,000 all up front into a vehicle. Those first 2 rules are a little tricky to achieve, and you would assume that the average person wouldn't be able to follow those goals, especially car people, which is why I've come up with my own rule. For my rule, you should have at least a 6-month emergency fund, invest 15% of your gross income into your 401k, and then max out your Roth IRA, and if you really want to be a superstar, your HSA too, if your company offers one. That's a health savings plan. Yes, I know this seems like a lot of saving and investing, but I don't give you a monthly percentage really that you have to stick to afterwards. It's really up to you to decide if you want to spend more money on car parts or a vehicle, or if you'd rather spend less and go out to eat more, go on more vacations, donate more to charity, etc. That 6-month emergency fund, it's just nice to have that for a rainy day, and the investment portion gives you a little bit of financial backing security later in life when you'll need it the most. A lot can happen over the course of a life, and there's not too many people that said, well, I wish I would have bought that car when I was a kid and not invest the money, because they're probably sitting on a nice pile of cash right now. And the majority of people say that, well, nothing is guaranteed, and while that's definitely true, you need to live your life in a balance. And it's difficult to put a value on having a peace of mind for yourself or your family's future, so I can't stress enough that investing portion, especially when you're younger. I've got a link to M1 Finance and Acorns investing down there. They're very simple and easy to get into, so give them a look if you're curious. The final rule is the 1/10 rule, which was developed by Financial Samurai. Very popular blog. You might have heard of it before. And personally, one that I think the majority of people trying to build their wealth rapidly should consider. It really doesn't allow you to buy a new car, but it helps you spend responsibly, which reduces your financial car ownership stress, and it allows you to increase your net worth a lot quicker over time compared to a couple other rules. It's very straightforward. It states you shouldn't spend more than 10% of your annual gross income on a vehicle. It can be new or old, but it's probably going to be old. In this case, you'd need to have a $400,000 a year income, and you must own it for at least 5 years, but ideally more. The theory here is to minimize your financial stress, frees up some money to invest in assets or opportunities, things that go up in value that come your way. It's much more stressful and difficult making life decisions, very important decisions, when you're worried about payments each month. Whether you're going to move or if you want to buy something new, have another child, it's just nice to be able to have the money coming in and not going towards a car. Once again, this is Four Wheel Finance. If you have any questions regarding car buying or how much of a car you can afford, please leave them in the description below. And then that free auto quote, you can save up to $600 a year. Takes 20-30 seconds, totally free, and gives you a good idea of what kind of rate would be